Good morning from London. This is Bloomberg Markets Today. I'm Anna Edwards alongside Guy Johnson and Kriti Gupta. With the cash trade just less than an hour away, here's what you need to know. Novartis raises forecasts for the year after outperformance by some of its major drugs. We will speak to the CEO later in the show. Renault posts a beat in first quarter revenue, with EVs and hybrids now making up 48% of sales, despite a broad slump for electric vehicles in Europe. Plus, traders eye European PMI data out this morning for clues on the health of the economy and the ECB's rate path ahead.
In the meantime, a quick check on these markets. Green on the screen when you're looking at the stock market. Eurostoxx 50 futures higher by 0.5%. The FTSE 100 building on that closing record yesterday, higher by 0.6% futures trading. The bond market stays sustainably above 4.5%, 4.6 on the 10-year yield. And Eurodollar 106.49. Markets today starts right now.
Tuesday the 23rd, good morning, everybody. So equity markets bounce back, gold doesn't. We're going to watch the PMI data a little bit later on. Some interesting lines out of De Guindos this morning, the vice chair over the ECB, which I think are quite fascinating in terms of what he's looking at. FX apparently does matter. The Fed apparently does matter. Apparently these things now matter. We were told maybe a little while ago that maybe they didn't. But, guys, I think the equity market story over the last 24 hours, 48 hours, big sell-off Friday into Monday, we bounce back. But gold continues to track lower this morning, which I think is fascinating. Yeah, gold really interesting because it wasn't always 100% clear what was pushing it up in the first place. There were many theories, Chinese retail buyers, central banks. Yeah. The Fed dynamics didn't quite fit with what we were seeing with the gold price, but now we're seeing it in retreat. Yesterday, the biggest move, the worst move in 2 years, for the precious metal.
Apparently a big deal. I think what's important about the margin of the move is that the last time we saw this kind of percentage decline of, I think, 2.8%, it was back in June of 2022. And I actually went into our little Bloomberg archives, the vault, where we keep all of our history. It's quite big. it's enormous. And tried to see what the news was at the time. And it was actually the day of Powell's testimony in Congress when he had specifically said rates are higher for longer, more rate increases. And to me, I'm having a hard time kind of piecing together the narrative. Is this that concern that rates are, again, going to be higher for longer? Is it a rate story? Is it?
It hasn't made sense against the rate story over the last few weeks.
So, I think it's Mark Cranfield's talking about this on the MLive blog this morning. Is this just an NVIDIA margin call story? So I remember 2008, we get a big sell-off. Everybody thinks gold's going to protect them. Yeah. It doesn't, because what's the first thing you sell?
What you can.
What you can. And exactly, and gold is the thing you can sell. If that big margin call comes through, you sell the gold position to fund the other positions. Yeah. And you do wonder whether we're seeing some of that again.
You mentioned 2008. This is ringing bells now. All kinds of times where we've seen big moves in markets. Yeah. Gold can sometimes move counterintuitively because of that exact same effect. Yeah, so he's talking about how both of these trades, and the reason he makes the margin call reference is in particular around NVIDIA. He's saying, this is a retail investor favourite, and it dropped a lot last week. And as a result, you could have seen margin calls. And what do people sell? They sell gold.
I still find it fascinating of whether this is simply just a pullback, right? Like, is it still, because it's still staying above 2,300. I'm wondering if this is just like a very quick retracement of sorts.
It easily could be, and almost certainly probably is. I don't know the answer to that question, but we'll wait and we'll watch. But I think the margin call is interesting because what this tells you is that it just reminds people of the ripple effects.
Yeah, the linkages.
The assets are connected, and when things start moving big time in one place, particularly when it's a crowded trade, there are big ripple effects.
Sorry, go ahead.
No, I was taking us on to the London market.
I have one more gold thing to say, really fast, just because I got really nerdy and
Pretty busy morning.
I piqued my own curiosity. I've been like deep in the terminal world. When we're talking about retracements, I did a little bit of a nerdy thing. I looked at the intraday chart. You can do it on your Bloomberg terminal, going back to the kind of trough you saw on February 14th. So it's been about 2 months or so. And you look at the gold chart, and it's been this kind of exponential move higher, right? You take a retracement, a Fibonacci retracement, very simple, and it lines up perfectly to yesterday's sell-off. So that tells you right there that this is a technical move. And now I'm done with my nerdiness for the rest of the show.
I like the Fibonacci lines.
Let's see where Kriti takes us on the London market. The FTSE very much on the move in yesterday. Yeah. So, I mean, yesterday we saw stocks in Europe higher broadly, and the FTSE story stands out just because we've gone to a new record.
Can I throw a bucket of cold water on this story?
Please do.
Because again, the terminal does this beautifully. Go to your WEI screen, use the year-to-date currency adjusted line, put it into dollars. The FTSE 100 is in local currency up by nearly 4% year-to-date. It's up by 0.5%. if you put it into sterling. Yesterday's move was sterling. Like, people are just... Sterling took a hit yesterday. Take a look at what's happening in the gilt market. The gilt market is adjusting away from the Fed and to the ECB. And the ECB's expected to cut significantly more than the Fed. The market had gone that way. Now it's coming this way. Sterling is weakening. You plug that into the FTSE 100. These are the numbers you get.
That's a really interesting one, actually, because we had a story a couple of days ago talking about how the UK trajectory, certainly markets were putting it on the same trajectory as the Fed, but actually just in the last couple of days things have changed and repriced back towards the European story. So we'll see where that takes us. And we've got a guest, in fact, coming up talking about bond markets. So we'll certainly get a perspective there on gilts.
I love that we're talking about kind of this breadth of the market in Europe and it being really a currency story, because if you're concerned about a correction in the States, it's a tech-led correction. You're already seeing elements of that across the board. Is Europe the protection of it? We asked Helen Jewell this question yesterday over at BlackRock, and she said there will be a read-through, but it won't be as big of a read-through because Europe, in some ways, it doesn't have the tech problem, and that's actually a positive for investors that are looking to broaden out the rally.
But she did talk about rate cuts. As being quite a significant factor behind that. And I think that takes us to the de Guindos comments this morning, which I think are interesting. What the Fed decides is crucial for the global economy. Wait, I thought we were an independent central bank and we didn't talk about the Fed. We need to take into account what's happening in the United States. We are inclined to be very cautious after what happens in June. He's saying that June is nailed down. And the market's pricing 80% for a June cut. But after that, the market pricing gets very, very fuzzy. We're pricing 2.5 at the moment. And he's basically saying, I think what he's saying is, if the Fed doesn't cut, we've got a problem and maybe won't be able to go as far.
Yes, because wages have been the thing we were watching for the ECB as well. And he says there's a clear slowdown in the wage dynamics. And that's what we're really watching for between now and June. The June meeting, the reason it's important is because they get that fuller picture around the wage story for Europe. So that's going to be front and centre.
And the large remaining threat, to your point, stems from that services inflation. He also says you need to take impact of the FX movements into account. This is a dollar story at the end of the day again.
So this is all a dollar story. He's basically saying we can go in June, but I'm not sure we can go much further after that because we need to take into account, if we go much further than that and the FX move gets big, we need to take that into account. We need to look at what the Fed's doing, despite the fact that Christine Lagarde has repeated time and time again.
And he's not the only one who's talking about the FX story, right? We heard it out of Japan as well over the last 24 hours. Japanese Finance Minister Suzuki saying the time is ripe, basically, for currency intervention. We just don't know what that action actually looks like.
For further warnings, then, as we wait for the BOJ at the end of this week around what we could see in terms of intervention on the Japanese currency. Should we talk European earnings? We've had plenty of those coming through. Novartis, we mentioned that in the headlines. We'll talk to the CEO shortly. Upgrading guidance. What are they doing around the cost side? Still seems to be a bit of an unanswered question there. And a little bit of justification around the strategy looked for around bolt-on.
So this is a big upgrade. This is a more significant upgrade than you would assume via the cost story. And remember, Novartis reports in dollars, so you've got to factor that into account. Roche doesn't. It reports in Swiss francs. So Promacta and Entresto, two key drugs that are going off patent. And the expectation is that maybe the generic hit comes later for them.
Because that's why they didn't upgrade earlier in the year. Because they were waiting for clarity on the timing of that generic threat. And as to your point, Guy, this is a substantial upgrade, not just on sales, but also on the operating profit line. So something going well at Novartis. We'll talk to the CEO about that.
It was also a bit of a litmus test, right? Because he had come under a lot of flack for job cuts and spin-offs and kind of a really kind of austere strategy. And now it looks to be paying off. Yes.
Eventually it will hit, though. This patent cliff generic story will be... Are there drugs in the pipeline behind them that are going to fill the gap? So I think there's some quite interesting questions.
Plenty to discuss. SAP also out with numbers. And I'm really interested in this because, of course, there's an AI line. It's a tech story, so, of course, there's an AI line. AI, they've been offering businesses AI tools in the cloud to try and sweeten the incentives for moving from on-premise software provision to cloud provision. But that's kind of what I find fascinating about this story is, I think, it's almost a decade, is it, that we've been talking about this transition from on-premise to cloud, and still this is generating
SAP makes loads of money off the off-premise business. Still. That still does really well in that business. So the migration is definitely going to help them, but they're still that side of the business still is quantifiable, understandable, predictable. So there's a kind of we want to make the move, but maybe not quite as fast as we thought.
Well, and it's taken some time, and moving to subscriptions is seen as something that increases the amount of money you get per customer.
But I love that the way to sweeten it is by offering 50% discounts. That's enormous. Consider offering your product for half of what you usually do just to accelerate that process. I also saw that their current backlog was 28%. So there is desire to move this quickly. It just seems like there's a capacity issue. There's a little bit of a delay issue getting baked into this.
There's a great line in the. I just wanted to bring it up because there's a great line from the CFO over at Renault this morning, talking about the fact that residual values higher thanks to stable prices. It feels like that's a little bit of a shot at Tesla this morning.
Well, and they
stop lowering prices.
Yes, and here's a business that's paid the price for what Tesla's doing because they had to delay the spin-off, the listing, the IPO, the Ampere business, the EV part of the company, as a result of some of the Tesla price cuts. So, but the really interesting lines out of Renault then. Beating estimates, EVs and hybrids now 40% of sales, back to profit, revamping the lineup and actually talking about EV products at a much lower price point than some of the others.
Well, but remain open to an affordable EV platform partnership. They're all struggling. They can't figure out how to make low-end EVs to compete with the Chinese. Yeah. And the Chinese are going to dominate that space unless they can figure that out.
Yeah, and getting the right tie-up really crucially matters, of course. They clearly were, of course, very closely linked to Nissan, but the market has rewarded them for reducing the ties with Nissan, for getting out of that, and now they're bigger. The market cap of Renault now actually bigger than Nissan.
And Renault has a currency problem as well. Their car unit division in particular fell not because of the dollar, but because of devaluation in the Argentine peso and the Turkish lira, which is, I think, it was like the line that shocked me out of that reporting. It's interesting that we're starting to factor in more of the currency story. We talk about it on the macro basis all the time. Now it feels like it's coming more and more into the conversation with some of the corporates.
One of the key things to the electrification story is going to be copper. There is a growing shortage around copper at the moment. You take a look at what Anglo is saying this morning. Anglo American coming out and cutting its full-year copper production targets.
And there's a big red box around copper on the GMM screen today. It's down by 2.3% this morning.
Which is it has had a really good run recently. So I think maybe there's some kind of profit-taking that maybe is coming through there as well. But nevertheless, you talk to all the copper specialists, they're all telling you there's shortages coming. And that's where this is a supply-side story. Demand is going to be big, but there isn't going to be supply. I find it fascinating that Anglo's cutting its copper production forecast, not increasing it into a market you would have thought would be desperate for copper to electrify the global economy. Yeah,
absolutely. The electrification of all corners seems to be something we talk about daily. Let's also talk about what's coming up today in terms of the agenda ahead. A US two-year auction worth $69 billion. Is that a record? I think that's a record two-year auction. We've got the US Senate aid vote. This, of course, around Ukraine and the Middle East and other things, and really crucially in focus. We've got the UK Prime Minister Rishi Sunak on the Ukraine beat, also heading to parts of Eastern Europe. He's going to Poland. He's also going to then be in Germany. Of course, we'll be focused on the earnings stories as well. Here in Europe, we'll have Kering leading the sort of luxury names. Over in the US, Tesla, we've mentioned them already, but Tesla will be reporting along with Visa, PepsiCo and Texas Instruments. And we have some central bank speakers, crucially not from the Fed, but from the ECB and from the Bank of England. So a lot to think about when it comes to the macro, the micro. It's got it all today.
I know everyone's excited about these Tesla numbers. I'm really excited about the PepsiCo numbers.
And I love a snack.
I love a snack. My favorite ratio in the PepsiCo numbers is the snack beverage ratio. And during COVID, they went in opposite directions, and the recovery trade flipped it again. But I think it's such a great take on the consumer. And I think there's a really big macro read from PepsiCo earnings because it speaks about disposable income. How many people are willing to buy $4 soda on the run? I love that. That's what I'm most excited about. So tomorrow I will come with some PepsiCo facts.
But this speaks to the Unilever kind of Nestle story. I appreciate there's slightly different markets, but similar enough to kind of put in the same bucket. And the fact that these are the areas that have underperformed, and the reason reasons they've underperformed is because there's an expectation they won't be able to drive the top line because they've really benefited from inflation, allowing them upside on the top line. The idea was inflation comes down, that goes away, therefore they struggle, therefore they need to cut costs in the middle. But if inflation's still going, particularly in the States, maybe the top line keeps going as well.
Right, so maybe we revisit that. Because, at the start of the year, the conversation had been a pivot away from pricing power towards volume. Now the mix maybe goes back. A lot to think about then when it comes to the agenda ahead. Coming up then, Guy, we've got Novartis' CEO standing by for us. Vaz Narasimhan is going to be speaking to the team, joining the show to talk about earnings after the drug maker raised its forecast for the year.
Absolutely. We're going to catch up with Boston Consulting Group a little bit later on. Christian Schweitzer is going to discuss the global demand for consulting services. We'll get his take on the German PMIs as well. Up next, equities bouncing back, but for how long? We're going to take you back to that market conversation. You want to join in the debate? We've got lots to talk about this morning. Kriti's going all Fibonacci levels. We definitely usually elicits some kind of a response. IB Plus, TV Go, this is Bloomberg.
The idea is diversify, keep a lot of income, don't take a lot of interest rate risk, and just move it around. I mean, at some point this year, I think we're going to increase our interest rate exposure depending on the inflation data we get. But for now, let's just clip coupon and try to make it through what is a tough rate period.
Tough rate period. BlackRock's global CIO of fixed income, Rick Reeder, there speaking to Bloomberg. Let's get some further views on bond markets. We're joined now by Eva Sun Wei, who manages the Global Government Bond Fund at M&G Investments and joins us here on set this morning. Very good to see you, Eva. Nice to have you with us. Let me get your overall view then that sort of sets out your stall for 2024, and we'll start with the Fed. When we started this year, the market came into this year thinking we'd get 6, maybe even 7 rate cuts. That's a long time ago. We're now in April and the market is expecting far fewer, if any, in some cases. Some people not expecting very many cuts from the Fed at all. What are you positioning for this year?
I think, we've seen a lot of variation in terms of market positioning, market forecast, market pricing. We were pricing 7 cuts at the beginning of the year. Now we're just about pricing 40 basis points after yesterday's moves. I think there's a risk of too much complacency in the market. I think the outlook is generally pretty positive in terms of economic growth, in terms of, where markets are heading for this year. I think we've seen signs that things are starting to wobble slightly, especially if you look at risk assets. So I think there are signs that actually we could be surprised in terms of cuts coming further forward. But I think a lot depends on the data. A lot is still, riding on this strong economic data, on the US exceptionalism. It's really taking hold of markets at the moment.
OK, and where does the UK stand? Where do gilts stand in that mix then? We were just showing a chart there that talks about how, where rates are heading in the US, in the UK, and in the Eurozone, and you talk about US exceptionalism. Until the last couple of days, the market seemed to be thinking that the UK was going to price a little bit more like the Fed than the ECB.
Yes.
And yet then we rethink that, and the gap closes, and gilts sort of trend, yields in the UK trending downwards towards European levels. So where do you expect gilts to trade?
I think that's a really interesting one because, we were also at one point expecting the Bank of England to be the first ones to cut. I think everyone expected the UK to be sat on the worst economic profile and therefore needed to cut first, and that has definitely been pushed back. I think there is definitely more room for the Bank of England to potentially cut sooner than markets are pricing, especially if you look at currencies. I think actually given the strength of sterling over, the more medium term, of course it's been weaker in the shorter term, but over the more medium term, that sterling strength I actually think gives the Bank of England a bit more of a buffer to cut without, the currency absolutely tanking. And so potentially, bit sooner, but at the moment markets are, very unsure.
Anna's bringing up the ECB, so I want to talk about the ECB.
Yeah.
Vice President de Guindos is on the tape this morning talking about the Fed and the ECB. How much divergence can we see between European central banks, the Bank of England, the ECB, and what happens with the Fed? He's saying this morning, it's a Le Monde interview, I think, we need to take the impact of FX movements into account. What the Fed decides is crucial for the global economy. We need to take into account what's happening in the United States. June is nailed down, but he's not sure after that. So we go once in June, Fed doesn't cut very much. How much room has the ECB really got?
Yeah, I think we need to look at, obviously, the data, but we also need to look very closely at central bank rhetoric and the narrative that they're, trying to put out there. I think they're, as you say, very set on June. I don't expect that to change in the near term. Yeah. I think people are, I think the concern is that the divergence becomes one is hawkish and one is dovish, and I don't think that's quite what they're aiming for. I think we're going to have a situation where the ECB knows they likely need to cut first, but they're going from hawkish to perhaps slightly less hawkish. I don't think they're suddenly going from hawkish to, very easy monetary policy all of a sudden.
When's the bond market going to freak out about BTPs?
Yeah, BTPs concern me slightly. I mean, they've outperformed broadly, especially other periphery markets. when spreads start to, sell off and get wobbly, in the past we have seen BTPs act a bit like corporate credit and therefore widen alongside spreads. We do know the fiscal position is a little bit wobbly in Italy. The thing that concerns me is if we do have a spread blowout in Italy, the ECB has their spread control tool, the CPI, that actually requires a fiscal deficit. Exactly. A lot of conditions, one of which is a fiscal deficit of -3%. And at the moment, for 23, we were on -8. So there are some concerns there. If we haven't seen it yet, but if something were to go wobbly in the BTP market, I do have some worries there.
Put a number on it. What does a big spread blowout look like?
I think, there's all-in yields and there's also, spread versus Bund. And I think we're not quite at the sort of 300, 400 levels that we were considering back in, a couple of years ago when we had emergency meetings and the things that were potentially triggering those spread control tools. I don't think we're close to that yet, and it will be a balance of both BTPs and Bunds. So not there yet, but a concern.
And then let's bring it back to the States here. 5% yield is something we talk about often on this show, the possibility of it at least. Is that on the horizon? Do you see it? What's the ceiling in yields on the 10-year right now?
I think today's auction will be important to see how much, appetite is out there and see what, whether we can get to that 5% point at the front end of the curve and what that potentially means for the kind of belly 10-year of the curve. I think curves have been very important kind of this year. We've seen steepening as more of a bias, and now we're going back to flattening as those, cuts are being pushed out. And so I think the 10-year is sort of actually staying reasonably stable versus the front end and the back end, given the kind of seesaw we're seeing. But, in terms of terminal value for the 10-year, I wouldn't rule out going back up to 5, but I don't think we'd get much further.
In terms of, you look at the data and try to think about and understand the data and what's driving things. We're going to get PMI data out of Europe very soon, throughout this morning, and I'm trying to understand what the relationship that markets have to the data at the moment. You talk about central banks a little bit earlier on. In terms of the swings we're getting, how does it work? Is it data Fed market, or is it Fed's kind of data? What am I looking at? What are the clues I'm looking at in terms of how this process is going to unfold at the moment? They talk about being data dependent, but how data dependent really are they?
I think there's been a real shift in terms of markets being much more reactionary at the moment versus being proactionary and being more forward-looking. I think we're really at the moment reacting to very recent data points, which sometimes is a bit confusing because if you're looking at monetary policy and fiscal policy, these things operate with a lag. So it feels often counterintuitive to expect central banks to react off the most recent data point when actually they should be reacting off, whatever's fed through from a while ago. I think we have a bit of a pattern at the moment of data comes out, market reacts, and then we have a central bank commentary that will either be hawkish or dovish versus the data, and then that will swing markets the other way. So there is a bit of a dance that we're going through at the moment.
Do you think the market, do you think the reaction function is working? Do you think the market understands the reaction function, or do you think the Fed has a reaction function, the ECB has a reaction function? Very briefly.
I think, lots of uncertainty in the markets. I think difficult for investors to position at this point.
No kidding. No kidding. Eva Sungwei, Fund Manager, M&G Investments. Thank you very much indeed. Coming up, we're going to talk about what's happening with the yen. We need to talk about the BOJ as well. That's next. This is Bloomberg.
I think it's fair to assume that the environment for taking appropriate action on Forex is in place, though I won't say what the action is.
Finance Minister Suzuki talking about how the environment is now in place to intervene in the FX market if needed. The language gets stronger and stronger and stronger. This is probably the clearest signal yet from the Japanese authorities that they are getting ready to pull the trigger on some kind of intervention. When's the right time? We thought it might have been at 152.
Yeah.
3, 4, 5. We keep going. The market gets more and more stretched.
Yeah, the end of last week, we were talking about the meetings taking place between Japan and the United States, the Treasury, Treasuries coming together, if you like, and it was seen as a bit of an endorsement from the United States. But how long the lead time is between that kind of meeting of minds and some actual action? Maybe we're about to find out.
Well, the yen is so fascinating because it's kind of this traditional haven trade, right? And you saw it with the Swissy as well, and yet it's not really functioning that way when you look at kind of capital flows, et cetera. And I think a lot of that is because of that intervention risk. It's just too volatile. It's too risky to serve as that hedge, even though it is a creditor nation at the end of the day. Which I think brings me to the kind of the gold story as well, because it kind of feels like there's that gold trade-off, right? If the Japanese yen isn't going to be your hedge, or if the Swissy isn't going to be your hedge, just given that the S&P is cutting and has been had an inflation problem for a while, where else do you go besides gold and the dollar? And it feels like the dollar has only become repopularized. I think I'm going to go with that.
We'll go with that.
Leaning in. Since this kind of higher for longer narrative, because it was also that the dollar is going to weaken at any moment now, given the Fed cuts. That really only leaves one player on the table, and that's gold, right?
And you've got some charts.
I do. I was waiting for.
Kriti's been having so.
I was waiting for a response. I can go into the chart too. All cool. Anyways, overnight we talked about this at the start of the show. 2303 is where we are on gold. And I think we're kind of racking our brains about what drove the move itself. Is this a rate story? Is this a fund flow story? I've got a third theory, which is that this is really just technicals. And I'm putting my American hat on, which is it's simply to say it's technical stupid. And I'm not calling anyone stupid. That was a reference to James Carville. It's meant to be funny, whatever. And what it basically shows is a Fibonacci retracement. It's very simple. You take it down from the trough in February 14th, which is kind of the recent low that we had year to date, and you take it all the way to the peak that we got a couple of last week, actually, in the record highs. It lines up perfectly. You can see that with that yellow line in between when it's at 23.6% level. So when you see it line up like that, to me, that screams this is just quickly taking some cash on the table, taking a little bit of a breather. It's not necessarily fundamentally driven. So it's a theory.
I can understand why it might stop there, but why did it start there? The sell-off is my question. So why has gold come down? I can see. I think there's a nice line in the sand that allows for the technicals to dictate how far the sell-off goes.
Yeah.
But why did it start? And this comes back to this whole idea of. Are we into margin call territory? Are people selling this because they have to? Is it just gone too far? Are central banks backing off? I think so. I think it's really interesting that it stopped here, and that gives us some sort of a floor on it. But kind of, what does it tell us about how far we could go back up again?
And it's in conjunction with the fundamentals, isn't it? You know, with the geopolitical narrative, clearly the tension building over recent weeks, and then the interpretation of what we've heard from Iran being that, you know, that things maybe do not escalate right here, right now, and that being seen as something that leaves some room for gold to come lower. So the fundamentals in the mix as well.
It does, and I think there's also that consumer story to it as well, right? Because you mentioned, I think, the physical demand story that we mentioned as well, and that it's, you know, the Chinese and Indian demand story that you can get in January, around Lunar New Year, et cetera, can also create kind of a bid, but then also flows into this kind of global consumer story, and China's such a big part of it as well. And that's kind of where I want to go next when it comes to simply our next guest. Joining us now, Phoenix Callan, Global Head of Emerging Markets Research over at SocGen, joins me this morning. Thank you for joining us. Thank you for making it in. Talk to us about that consumer story, especially when it comes to the emerging markets. Is there more concern in the EM universe right now?
So I think one of the really interesting things that I've just noticed over the past several days is that the story that we're seeing is not kind of the traditional kind of risk-off, risk aversion, U.S. dollar going higher, U.S. rates going higher, EMs blowing up. We're not seeing that story. And because the underpinning of the U.S. economy is so resilient, and so we've got that kind of underlying confidence that's imbued by the stronger U.S. growth context. And I think that's helping EM currencies to not blow up. It's not like last year when we were kind of in a stagflationary environment where U.S. growth was slowing down more markedly and we still had inflation. Now it's more of an inflationary environment, underpinned by resilient growth. And I think that imbues quite a lot of strength into some parts of emerging markets, in particular, like the LATAM complex, that's still benefiting so much from their tighter linkages with U.S. growth, from all the nearshoring themes, and then some particular markets as well that are benefiting from kind of the shift away from China, like India, like Vietnam.
What is the bigger risk to the EM universe? And I'm sure we'll get more specific. But is it the dollar strength story coming off of the Federal Reserve, or is it commodity-driven inflation, perhaps coming out of the Middle East or arguably Asia as well? What's the bigger risk?
So I think what we're likely to see is actually a decorrelation between the dollar and EM FX. So up until this point, it has been super strong, correlations in the 90s, betas close to 2 for some currencies. So there's been a very strong impetus into EM currencies from the impact of the US dollar. Yeah. But I think going forward, because the dollar strength is actually underpinned by very resilient U.S. economic growth, we're likely to see a divergence between the performances of EM currencies, a decorrelation at the aggregate level, and then we'll see some very high-performing currencies like LATAM versus some underperforming currencies like, let's say, dollar against CEE.
I was going to ask you about that. So the emerging market currencies in Europe I wanted to go to, and in particular you're talking about LATAM benefiting. So I wonder what's under pressure then. Do you think that the Eastern European currencies take some pressure, given where Europe is right now and the European growth story in contrast to the US? What's your view?
Yeah, I mean, we've just been disappointed time and time again by the European growth story. We'll see some more data come out this week around kind of the business climate surveys. But overall, it's been a drag on CE performance out of those tight linkages between CE complex and the euro. And because of how tightly linked euro is to the dollar, that actually weighs down the CE complex quite a lot, much more so than the LATAM currencies. They're not that much correlated to dollar strength right now.
Yeah.
But on the rate side, LATAM is where things are much more vulnerable, and they are much more vulnerable to, let's say, higher U.S. Treasury yields. That impacts LATAM rates much more so than any other part of EM.
OK, but you do think that some of the structural things that Europe is doing can support some of those Eastern European currencies. So, for example, I noticed in your notes you say you're bullish on the Polish currency, and this is to do with payments from the EU Recovery Fund. So here's structural big change in Europe having a real impact on your calls.
Yes, and also kind of the shift that we saw out of the government and the elections that happened in Poland last year, and a much more kind of European-friendly, reforms-focused government that's more market-friendly.
The more predictable policy maybe around monetary policy.
Possibly, yeah.
How many central banks in the EM universe are going to have to raise rates to defend their currency? Indonesia is coming on Wednesday. Are we going to see many more? Are we done with rate hikes in that universe?
I think the bar for rate hikes is very high. So, I mean, I've thought a lot about this. And, yeah, Bank of Indonesia, that's one place. But there are not that many places that are going to be under so much pressure to hike. I mean, at a stretch, Turkey. Yep. At a stretch, South Africa. And Egypt as well. But I think, you know, those cases are also very idiosyncratic in nature. And like Turkey still has a huge inflation problem that they're trying to grapple with. So I think in terms of rate hikes, it's very far and few in between. Okay. So much more likely we'll see a prolonged scenario of things staying where they are, and then a much more gradual easing cycle than what was priced in previously.
If the Chinese decide to depreciate their currency significantly, what is the read across into the rest of the EM universe? They haven't done it yet. They're holding the line, but we're seeing kind of incremental moves, and we're watching it very carefully in terms of the windows they're operating in, the bands they're operating in. If there was a desire to push out exports to the rest of the world, currency may be part of that. What impact would that have? The Chinese have long kind of argued that they're trying to create a strategic alternative to the dollar. If they decide to abandon that, what impact would it have elsewhere?
I think for them, the implication around currency stability is one such that they want for there to be a predictable environment for investors to be comfortable with. And let's say if we're looking at a scenario of a one-off deval, that imbues a lot of uncertainty and volatility, even if it's short-term, into the market. And I think at this point, they're quite uncomfortable with that prospect of... sure. And so trying to protect capital flight and try to prevent against kind of the risk of capital moving out of the country is still a big concern for them. And so I think at this point, because of how weak the underlying economics of the country are, they still want a very stable financial system and try to avoid that risk altogether.
Phoenix, we talked there about what the Chinese authorities might do with their currency and how that spills over to other EM. What about something else that we're waiting for in FX markets, which is whether we'll get some intervention from the BOJ and how that spills out into EM, perhaps? I mean, clearly, it'll get transmitted through the dollar, I imagine, maybe other ways as well. What's at stake for EM if the BOJ does intervene to support its currency, do you think?
Yeah, I mean, that's a risk. I think... At this point, the market is just so unconvinced that this is going to happen anytime soon, and all the meetings that we've done, clients are pushing back against this and trying to short the yen further and further. So I think that risk is being pushed out because the market is having such a strong position, and the short yen position is still very, very strong at this point, according to the data. So I think if this does happen and they intervene aggressively enough, yes, this could feed through to higher U.S. rates, for instance, and we'll have a whole kind of repricing around what kind of investors are now coming back into U.S. Treasuries, and is that kind of a compelling enough level? So I think for EM, the risk still over the near term is not around the yen, but it's around kind of a move away from EM rates as being kind of the story for where to invest in emerging markets, and then towards selective EM currencies that are going to benefit from the growth differential.
Great to see you this morning. Thanks for dropping by to see us. Trying to put the pieces together at the moment. Absolutely fascinating. And it's really interesting what you say about the interest rate hike story. Phoenix, thank you very much indeed. Phoenix Kalin, Global Head of Emerging Market Research at SocGen, Corporate and Investment Banking. Thank you very much. A little news on gilts. We're getting a little extra supply. The DMO is announcing this as we speak. Says it's going to sell £277.7 billion worth of gilts compared to 265 it had planned for in March. The increase will mean an additional 5.4 in sales of shorts. Medium, I think, gets an extra 3.9. We get an extra billion of long-term gilts. There's another 1.1 of index linkers coming through. The change reflects the UK public finance data published earlier on Tuesday. So UK government borrowing overshooting official forecast, Sana.
OK, so that's the UK story. Let's move on to another angle on commodities. We've got Shell and Total Energies among several global energy companies in talks to buy stakes in ADNOC's next LNG export project. This is in the United Arab Emirates, in the UAE, the two oil majors, along with some other names, including the Japanese trading house Mitsui. They're all looking at trying to get equity stakes in this particular facility. They want contracts to purchase LNG from it, as well as these equity stakes. So we'll continue to watch that one. And Kriti, we keep our eye on the European corporate news flow.
We do. Coming up on the program, Novartis raising its forecast for the year. Sales of its blockbuster medicines outpace expectations. We're going to get the details next. A little bit of a deep dive. Stick with us. This is Bloomberg. Welcome back to Markets Today. We're about 14 minutes and change from the cash equities open. European futures pointing to a positive start. Despite that FTSE 100 record that we saw yesterday, looks like a little bit more momentum across the continent. Does that sustain going into the open as we get perhaps a little bit more of these earnings starting to show up in some of the numbers? In the meantime, before we get into some of the nitty-gritty of the corporate space, I want to bring some headlines coming out of Russia here. Getting some headlines coming here from TASS saying that Russia may abolish the export duty for Rusal. This is, of course, the second largest aluminum maker in the entire world. They're discussing those support measures in the near future. The context is important here because on April 16th, Rusal had specifically appealed to Russia in the face of the sanctions coming out of the UK and the US around being able to trade Russian aluminum on the LME. That, of course, created a little bit of an oversupply on the LME that we covered on the show as well. Since then, now it looks like Rusal needs a little bit more help from the Russian government. Those support measures to be discussed. Guy.
Let's talk about Novartis. Big upgrade this morning. Everybody was expecting that the company would beat and raise. They've certainly delivered on that. The company has raised its full-year forecasts. Sales of blockbuster medicine, heart disease, psoriasis, outpacing expectations. The Swiss drug maker is pushing for growth after years of successive revamps. We've cut jobs, but is the job story really responsible for the upgrade we're seeing this morning? Let's try and figure this all out. Bloomberg's Sam Fazeli joins us now to try and answer these questions. This is a big upgrade. Talk me through the background to why this company has the confidence, why Vas has the confidence to deliver that, and where it's coming from in terms of the drug specifically that we're looking at.
Yeah, so good morning. We think, looking through the numbers, that the massive, this wasn't a one-step upgrade for the full year. It's a two-step upgrade on the core operating margin, right? We went from high single digits to low double digits or mid-teens. We think that's coming from more confidence from the company in being able to defend the product, Promacta particularly, we think, against generic competition in the latter half of the year. So that's something that clearly a product at that age usually has the best margins.
Yep.
And so when you save another quarter or 2 quarters of sales there, it does impact your margins significantly. But the underlying is also doing well.
OK, that's interesting, because Guy was making the point, it's interesting to get your view, Sam, we were talking about this earlier in the programme, that you fend off the generics for a few more quarters. You still face that generic competition, it's just delayed. But I suppose your point is that when you're talking about patents, every quarter counts.
Absolutely. I mean, you know, a drug that's doing $2 billion a year, you keep it another, or 500 million a quarter, you keep it another quarter, and let's say the margin on that is, gross margin on that is like 80-90% now, you know, that's quite a useful amount of cash to keep on your balance sheet.
So what's the strategy there? How are they combating that?
You know, so they have a pretty decent pipeline of products feeding it, but I think that's a key question for the company as to how well will you be able, because these genericizations are tough. They tend to be, especially the ones that that allow you to have this kind of operating margin impact. These are the sorts of things that end up being difficult to fill the hole with another drug. It takes time for other drugs to grow. So they have a pretty good pipeline. Novartis is a very large, one of the largest pharmaceutical companies. They've been successful in some of the products that they've brought along, quite a few. And I think they'll manage, but the question is, what's the cadence of that going to be like? Are they going to tread water for a year or two, or maybe even dip a little bit? But nobody would be surprised if they do, because these are hard things to replace.
What's next? We've got Nova coming up. We've got a big R&D day coming up for Astra. What are the ones you're going to be watching out for this reporting season that are going to kind of really stand out? Is it going to be Novo? Is it going to be that Astra story? Is Roche going to do anything? What's happening with Sanofi?
So with Novo and Lilly, both of whom are next week,
yep.
I think the question's a little bit like what you keep asking, I'm pretty sure, about the tech giants. Will AI match the lofty expectations that analysts have got in consensus? You know, that every quarter that game is played, right?
Yep.
The same goes for the obesity drugs, because you do have that supply constraint, right? Remember that hasn't been solved necessarily. They have much more demand that they can fulfill. So the question is, will they meet this quarter or not? But we're not quarterly focused people, at BI at least. In the long run, as you know, we have a very positive view on the obesity market, which clearly is echoed by quite a few people in the market. So, but it will be what people are going to watch out for. And both companies have been working on expanding their capacity, some of them by doing deals. And then AstraZeneca, of course, which is this week, you know, they do have quite a bunch of new products coming along. You might have seen the share prices come back quite nicely, a good 10% rise in the past couple of months. And we want to see what they're going to tell us on the 21st of May. They have a strong pipeline. This management team has really rejuvenated this company. Can they do another 10 years of major growth?
We'll be back to talking about executive pay in the UK, won't we, as well? That might be a theme. Sam, thanks so much for joining us. Sam Fazeli, Senior Pharmaceutical Analyst for Bloomberg Intelligence, joining us there with the latest on Novartis and some of the other themes in the drug space. And don't miss our conversation with Vas Narasimhan, the CEO of Novartis. That's coming up at 8:15 a.m. UK time. Let's get an update on stocks in focus this morning. Joe Easton has a briefing. Joe.
Morning, Anna. So we're starting in the auto space with better than expected earnings out of Renault this morning. This as the company continues to push on in electric vehicles with a bunch of new launches recently. And these better than expected results taking the sting out of recent news that they cancelled their EV IPO, the Ampere business, which they recently scrapped. Here's the numbers on the screen. 11.7 billion euros in terms of the revenue, better than expected, as I say. EV's now 48% of sales, and that IPO banded down the bottom there. Now, some of the new launches coming out over the next year include the €25,000 Renault 5, they say in the statement. That should help them push on in terms of their sales as well. There it is on the 1 year, up 40%, 43%, doing pretty well. That is a recent rally that we've seen since the back end of last year, but analysts are still positive on this one. 16 buys, only a couple of sells on Renault at the moment. Potentially this will please all of those bullish analysts this morning. Then we've also got AB Foods, the owner of Primark. We've got a jump in operating profit across the business, all of the segments seeing decent gains in terms of their most recent profits. Not just Primark, though, we're also seeing gains in grocery. This includes brands like Twinings Tea and Kingsmill Bread. So we've got profits up 33% there. And sugar doing well, interestingly, due to some agricultural trends. They say the beet crop has been better than expected. As we can see now, sugar is around 13% of sales. Retail Primark still the biggest driver, 46%. Finally, over in cloud software, we've got SAP, the fastest cloud growth on record for the company. According to them, revenue is slightly higher than expected as well. The only slight negative is operating expenses much higher and potentially trimming at some of the EBIT gains. That's according to analysts at Morgan Stanley out in a note this morning. The stock, though, is higher on Tradegate by around 3%. This morning, according to the latest data. There's the breakup there. Cloud still the main business, 44%. Software is much smaller now, and software services as well, making up the other business. Interestingly, only 3 sales on that one, though, so 18 buys potentially. That could be another one that's pleasing analysts this morning. Keep an eye on SAP in Germany.
All right, our equities reporter there, Joe Easton, we thank you so much for bringing those to our attention. Of course, we'll be speaking with the SAP CFO later. That conversation around 11:30 a.m. UK time. You do not want to miss it. Coming up, it is the market open. Futures pointing higher. This, of course, comes off the toes, or off the heels, I should say, of the FTSE 100 hitting that record high. The open's next. This is Bloomberg.
Tuesday, the 23rd of April, a couple of minutes to go until the start of equity trading here in Europe. There are intriguing things happening in European equities this morning. So, FTSE's called up around 8.9%. The CAC is very soft this morning. The print I'm looking at is negative 0.5% at the moment. I will caution that I think LVMH goes XD today, so that's probably worth flagging. Quite a big part of the CAC Carop, quite a big part of the European markets, so just be aware of that. But the DAX is up nearly 1.3% this morning. I wonder if there's some SAP in the mix there.
In terms of those ex-dividends, yeah, we've got LVMH, we've got Henkel, we've got Vinci, we've got Christian Dior. So there are a few to keep an eye on this 23rd of April, to your point, Guy.
Yep, worth watching out for that. Also, we're going to watch what happens with the Gilt Open, I think, this morning after that extra supplies come through. So the DMO announcing that first thing this morning. There's also a political implication of this, which is basically Jeremy Hunt doesn't have as much room for movement as he initially first thought he did have.
Yeah, so 4.2% is the yield on the 10-year. That's what we go into the session with. So we'll see where that one opens up. Talking about the bond markets, though, Italy-Germany 10-year yield spread, I see that dropping. You were asking our guest in the last hour about Italy and whether BTP's become a concern. She seemed quite relaxed, but we're at a 4-week low in terms of that yield spread.
The other two stocks I'll put on a radar, Renault and Anglo-American, both. I'm curious to see how Renault in particular performs, given that the revenue on the top line seemed good. But then if you look into the nitty-gritty, it's actually not as strong as expected. I'm curious how the market takes that, what they're actually responding to there. The Anglo-American piece is interesting, though. Do you start to see a more violent reaction in the copper market off of that kind of capacity constraint? Is that a big hit, or is that a boost to the stock in terms of simply lower supply?
We'll see how SAP opens as well. A number of stocks then. We've been through a few of them. SAP, Novartis, we get numbers out from all of these businesses. SAP dropped in the US session and then recovered. So we'll see where that one takes us. Opening calls had suggested we might be a little bit higher on SAP this morning. So markets are open across Europe. We're up by around 0.1% on the FTSE 100, the upper new records FTSE 100 as it was from yesterday. John Author's writing about that overnight, actually talking about the counterpoint between the real nervousness around geopolitics and the way that the FTSE comes through with a new record in Monday's session. Is that how do we assess the juxtaposition of those two things? Broadly, then, the story for Europe is a little bit stronger, up by 0.3% on the stock 600. The CAC is up by that amount, so on par with that gain, and the DAX up by 0.2%. So modest gains across these European markets.
Go ahead.
Yeah, I think it's interesting that I think you need to currency adjust all of this as well, which I think is something that we need to pay attention to. The FTSE 100, everybody's got very excited about the fact that it has rallied in the way that it has. Yeah. Back out the currency, maybe that story doesn't look quite so advantageous.
It depends.
Depends where you're investing.
Yeah,
if you're a UK investor, then you don't really mind too much because you're basically swapping one for the other. But if you're an international investor, are you really picking up that much here?
Yeah. 123 on cable as we speak. I want to point out on the FTSE, though, you are seeing the underperformer this morning being a lot of the commodity sectors, Rio Tinto, Glencore, and, of course, Anglo-American. So not a positive then from those numbers coming out on the copper space as well. But your healthcare, your commodity story as well is leading to the upside in terms of oil. Shell is one of your major index contributors to the upside. AstraZeneca, GSK as well. This feels like a Novartis read-through on the gainers.
This is a huge upgrade. They have really... There was an expectation. Are they not going to beat and raise?
Yeah.
Well, they've beaten and they've raised by an order of magnitude way beyond everybody's expectations. So yeah. I think the read across is that this is very good news for Novartis, but is there really a read across into the rest of the space?
It feels quite specific, doesn't it? I mean, Novartis shares, they're up pretty strong, up nearly 4% as they jump out of the gates this morning. But it does feel quite specific to this business. The conversation we were having with Sam Fazeli earlier on was that this is, that it's great for Novartis if you can fend off that generic competition for a little bit longer, but that doesn't have much read across into other corporates, perhaps. Technology doing really well, though, this morning. So maybe the read across there from the US session of yesterday.
And I was going to say the SAP numbers as well, right? Like the fact that ASML and SAP tend to trade hand in hand. It was also interesting that the banks are doing quite well as well. This actually feels like a fairly broad rally that you were seeing.
There's not many sectors in negative, only two.
Yeah.
So gilt yields are higher this morning, and the rest of the market, well, treasuries aren't, but gilt yields are higher. So this extra supply obviously is going to require extra payments, and as a result of which we see yields moving higher. That seems entirely logical. What is the read-through then from that massive auction you're going to see in the States today? Is there one in about 24 hours' time into the gilt market?
Yeah, and how much are they trading in reflecting each other, as we were discussing at the top of the programme?
I think they're probably... I think the two stories are the same in some ways. Yeah. We are in need of... We're going to have to push some extra supply out into the market. These are huge auctions in the States. Absolutely huge. And supply has been an issue. There have been bottlenecks in terms of some of that supply story. So I'm intrigued to see how some of these auctions go in the States. Let's talk a little bit about where we are with these markets. We have seen this significant sell-off that has taken place over the last few days in US markets. That didn't happen yesterday. But that is raising questions about what you do in terms of getting out of some of the concentrated areas of the market, particularly in technology. Anna was just mentioning that, and maybe looking elsewhere. We spoke to Helen Jewell yesterday from BlackRock to get her take on if you are going to get out of some of those concentrated areas, where do you go and where should you be looking?
The European names, this really could be an interesting time for these names. The broadening of the market, much more relevant in Europe. The valuation gap, which is now at 40% versus a more traditional 20-25, could be interesting. And if the ECB does cut before the Fed, which is now basically what's being built into consensus, could also give us a bit of a pivot for the small caps.
BlackRock CIO for Fundamental Equities in EMEA, Helen Jewell, speaking to us this time yesterday. Joining us now, George Maris, CIO and Global Head of Equities at Principal Asset Management. Nice to see you.
Great to be here. Thank you.
If you are going to diversify, do you think you should? And if you are, where should you be looking?
I do think you should diversify. I think there's going to be a broadening of market returns, especially within equities. The narrow concentration we've had has been partly a function of great fundamentals, but partly because we've had opaque economic environment, right? 2023 was a challenging year. You had bank troubles everywhere, whether it was Credit Suisse, Silicon Valley, et cetera. So there was a herding behind anything with good fundamentals. We didn't see that narrow out. We've seen a broadening out of economic fortunes. I think we're going to see a broadening out of economic returns as a consequence. And so it does mean you want to start hunting at places that haven't done particularly as well as others.
If we do see drops, though, like the 10% drop we've seen in NVIDIA, isn't there less reason to diversify? Isn't there a reason maybe to actually think of that as an opportunity?
I think you could say that. I would push back and say if you look at where momentum has been in the first quarter of the year, we've had, the second highest momentum number we've had in 100 years, right? So we've had an extraordinary hurting with respect to momentum as a factor in markets. Strong markets, I think there has been a winner-take-all mentality. I don't think that's been right. So a retrenchment from some of these companies like an NVIDIA, et cetera, which have skyrocketed to super highs. A lot of this based on very short-term trading activity does present opportunity to redeploy capital elsewhere.
What is the bear case for European equities right now? It feels like the consensus, at least from the folks that we've been talking to on the show, has been you've got a rate cut in the works, you've got currency depreciation, and you've got a broader makeup of the indexes. So therefore, Europe as kind of the American catch-up trade is a no-brainer. What's the bear case?
Well, I don't. First of all, I am sympathetic to that, but I don't think it's a no-brainer.
Okay.
Right? I think you continue to lack relative to the U.S. the most dynamic elements of innovation, right? So artificial intelligence still seems spurred in a particularly American phenomenon. If you even think about cloud-based development, it's a particularly American-based phenomenon. If you think about the advantages in biotechnology and therapeutics, even though a lot is happening in Europe, and we're playing it that way, there's still the eminence of that is in the United States. So you're seeing the cutting edge happen in the U.S. I think the argument here is, have valuations gone way too high? And I think this week will be a very interesting week with 6 of the Mag 7 reporting. I think earnings will likely be very strong. I think it'll be interesting to see is what reactions are. And I think it's that part that's going to be really that part of the behavioral element is going to be what's at play.
Are valuations way too high?
I think for the concentrated few, they certainly seem stretched. I think for the aggregated market, less so. And in fact, even during some of the sell-offs, we saw a healthy breadth.
Is that for tech in the States, or are you referring to Europe?
I'm arguing for tech in the States.
Okay.
But I would also argue that for the select few of, let's say, bulletproof companies, there's been a herding that has maybe been less valuation sensitive than it may otherwise should.
George, good morning. So interested to hear about your view on China, because you mentioned this in your notes. You say that this is a highly intriguing market at this point. When you visit and talk to clients globally, what are they looking to China for? Because, thinking has moved on a lot since, 10 years ago, where investors would maybe buy European names for the growth of the middle-class consumer in China, and that's the way they'd do exposure, or they'd go in and buy Chinese property, both of those perhaps coming under a little pressure as investment themes right now. So what do you buy China for? How at this point?
I think what's intriguing here is how the narrative has shifted so dramatically. Everybody, everywhere is negative on China, whether it's on the Chinese economy, the geopolitical situation, the constituency of the economy. It's negative every which way you go, and yet the underlying, first of all, it's still the second largest economy in the world. It is still growing. There's tons of innovation happening. A lot of the geopolitics, which are creating onshoring and nearshoring around the world, are also creating onshoring and nearshoring in China. So there's a lot of development opportunities there. And from a valuation perspective, it's at least the cheapest, if not among the cheapest developed markets in the world, trading at a substantial fraction of what you see in the U.S., even at a discount to the continent. So, again, I think the opportunities are intriguing.
But if you're worried about the geopolitics, maybe that just overwrites all of what you've said, all of those solid arguments you've made. Or is there a point where you say, yes, I accept the geopolitical risk and the other reasons are so compelling you buy anyway?
So I think the geopolitical risk has always been present with us. It's present everywhere you are in the world. And look, we have a hot war on the continent, right? And so geopolitical risk is everywhere. I think the geopolitical risk with respect to China feels overstated, substantially so. And with that, these are opportunities that are extraordinarily compelling.
When do I start positioning for the U.S. election?
That's a tough one because I don't know how that's going to play out. I think the U.S. election is, if you look at where markets are, the markets are indicating a toss-up. I think this is an election that will matter. It will matter for markets. And so I think you start thinking about buying companies that are, resilient, that are not terribly expensive, because it is going to be a volatile period of time.
Is that a question you're getting here in Europe? What's the number one question you're getting when you're talking to people here in Europe?
The question in Europe is, when will European equities rally? When will they catch up to the U.S.?
Is that where we started our conversation?
And it's been a question that's been foremost on people's minds for several years now. Is when are we going to close this gap? I do think the opportunity now is more intriguing than it's been in a while.
George, nice to see you. Thanks for stopping by. Next time you come to London, make sure you come and see us. George Maris, CIO and Global Head of Equities at Principal Asset Management. Thank you very much indeed. Novartis, the stock is up. The Swiss drug maker raising its full-year outlook. We are going to speak to its CEO, Faz Narasimhan, is going to be joining us next. This is Bloomberg.
This is Markets Today. We're about 14 minutes into the European trading day, seeing a fairly positive start, more momentum building in the FTSE 100, green on the screen across the board, and a fairly broad one at that. Your only sector in the red, at least on the FTSE 100, is going to be materials, perhaps a lot of that coming off the earnings story of Anglo-American and what the read-through is for some of the other commodity names, but plenty of other earnings stories to keep an eye on. SAP higher, for example, even Renault moving as well, and of course Novartis, Anna, coming in with a pretty hot share move this morning.
Yeah, absolutely. The Novartis share price up by 4.6% as the company upgrades guidance and in some style, upgrading the sales line and the core operating profit line. Let's talk about optimism for 2024 then with Vas Narasimhan, who's the Novartis CEO and joins us right now. Vas, very nice to have you on the programme as always. So you've upgraded your guidance today, expressing some confidence, some clarity perhaps around the threat from generic competition. Does this push challenges into 2025? Is this what we're seeing here, or are you just broadly more positive about the outlook?
I think, Anna, we're broadly more positive about the momentum we're seeing in the business. One, we saw very good performance across our growth drivers, both established medicines like Entresto and Cosentyx, but very strong growth from our recent launches, Kesimpta, Kisqali, Pluvicto, Leqvio. So when you have that broad base of medicines all growing really well, that gives us confidence for this year, but also for the years to come. In addition, we saw our performance broad-based from a geographical perspective. Very strong performance, U.S., ex-U.S., Europe, China, Japan, also giving us a lot of confidence. So while there was a small contribution from generics getting pushed out, we're reiterating our confidence in our 5% plus sales growth guidance out to 2028 and our 40% plus margin guidance out to 2027, along with the various guidance raises you just mentioned.
Can I ask you about Pluvicto then, Vas? There's clearly one of the drugs, a cancer drug that you have high hopes for. It does seem as if sales came in perhaps just a little shy of expectations, but I wonder if this reflects a broader concern about convincing the market to pivot towards a new type of targeted radioactive therapy. Are you concerned about how long it's taking to convince the market that this is the way forward, or do you not have concerns there?
No concerns. We feel very confident about the Pluvicto outlook. We saw strong quarter-over-quarter growth, and it's important to note we're just now coming out of a supply disruption we had last year. Now in the first quarter, we had 99.5% on-time delivery of the medicine. We're seeing a broadened base of growth in the United States from treating centers that are getting comfortable with this new technology. It is a very novel approach, and so oncologists need to understand they can refer patients for this therapy, radioligand therapy, for prostate cancer patients. The other opportunity we have in the second half of this year is this medicine will go global. We'll have the opportunity to take Pluvicto outside of the U.S. at scale, and that will give us further growth. The most exciting part of the Pluvicto story and our radioligand therapy story in general is moving into new cancers and new cancer settings. So with Pluvicto, we confirmed earlier this year that we will file for the PSMA4 setting for Pluvicto. That will allow us to broaden the indication base. And we've also done a number of deals and have in-house programs to bring more radioligand therapy forward, therapies forward. So we think this will be a significant market opportunity for the company.
Faz, good morning. It's Guy. So a big beat and a big raise, and the market likes it. What gets you the big beat and big raise in 2025? What are you most excited about? What's going to deliver the same performance that we're seeing now next year?
A couple of things, guys. So one, these growth drivers that we have that are really taking off with new indications. So you have Cosentyx that really outperform, and a significant outperformance in quarter one. And that's driven off new indications for this medicine. And this is a medicine we expect to be $7 billion plus over time, by the end of the decade. Cosentyx will give us a lot of momentum. And then you have this group of recently launched medicines that are going to get new indications. So you have Kisqali, you have Pluvicto, you have Scemblix, you have Iptacopan. Each one of these medicines, we believe, have multi-billion-dollar potential. They have new indications coming over the course of this year or early next year. That gives us another wave of growth. And then also exciting is we have a full pipeline. We had 10 positive phase 3 readouts in 2023.
Yep.
And as those readouts now come into submissions, that will give us the third leg to grow through the end of this decade.
Can I ask you a slightly sort of left field question this morning? Is Novartis still a Swiss company? Yeah. Let's keep you on your toes. Is Novartis still a Swiss company? I know where you're based, but you've now got an American-Italian chair coming in. I'm wondering how that's going to change the culture. You report in dollars. You're domiciled in Switzerland, but increasingly you don't feel like a Swiss company. Certainly, maybe compared with Roche, your CFO is still Swiss. How is the culture of the company going to evolve going forward from here? Is that Swiss heritage still strong, or is it being diluted, do you think, at the moment?
You know, Guy, it's interesting. We have deep Swiss roots. This is a 250-year-old company that's roots are in Switzerland and will remain in Switzerland. But we're also a global company. And the interesting thing is we've been a global company for over 100+ years. And so we want to maintain that global footprint, global talent, get the best people into the best roles while still maintaining our Swiss roots. And I think we strike that balance well. We have a few members of our executive committee who are Swiss citizens. I've lived in Switzerland for a decade plus. And so I think we have those deep Swiss roots. But it's important to remember, we are a global company. We compete in global markets. For our shareholders, they want to see a world-class global leading pharmaceutical company. And that's the balance we'll keep working to strike. But I sit here in Basel today, and that's where we're going to stay.
Faz, it's Kriti. Talk to us a little bit about the cash on your balance sheet here. There's a lot of positivity coming from you this morning, from your share price as well, even from the analyst commentary off these results. Talk to us a little bit about where you stand on, one, buybacks, and two, restructuring. Does that continue?
Yeah, we have a really strong cash position, and we feel really good about our shareholder-friendly approach to capital allocation. We maintain an approach of bolt-ons, and we look at really sub-5 billion bolt-ons. But if you look at most of the deals we've done, they've been in the sub-$1 billion space, and that's where we want to stay. We have an ongoing $15 billion share buyback that we expect to complete over the course of next year. And we continue to see buybacks as a critical part of our capital allocation strategy. The strong and growing dividend in Swiss francs will continue, and we maintain our investments in the business. In terms of restructuring, now what you see in the company is just ongoing adjustments. We completed a major reorganization a few years ago, and that's bearing fruit. I mean, that's what you're seeing in the financial performance and overall operating performance of Novartis. But we also recently announced a few other adjustments in our R&D footprint, and that's, I think, normal course of business. We'll, of course, always make those adjustments. But we think we're set up in the right way now through the end of this decade to drive the growth that we've outlined.
Talk to us then about that bolt-on strategy as well. Morphosis getting a lot of attention, that acquisition. How confident are you that it's going to pass kind of the regulator's ire? And if it does, how many more deals are in the pipeline?
Yeah, we feel good about the bolt-on approach. I don't want to comment on any specific company, especially because we're, especially the Morphosis, we have the tender offer ongoing. But overall, we feel very good about this approach of bolting on. We've done over 15 deals in the recent quarters, mostly focused in our core therapeutic areas or our core technology areas. You saw many deals in radioligand therapy or RNA therapeutics. And so we think this is the right approach to take those bets earlier on in the development life cycle of a drug or in a company, and then bring them into Novartis, and then we do the later stage development. We find it harder and harder to create value for larger acquisitions where, and I think that the drugs are already on the market or they're very well modeled by the street. So that's the approach we're going to continue to take, I think, for the coming years.
What would change that? Would a large deal in the space change that, proving it can be done? What is... I hear what you're saying in terms of the understanding of the science and you being able to model the kind of outcomes that you're looking at. But do you feel that the industry is being held back because of regulators or science right now in terms of its approach to M&A?
I think first on the first part of that question, there's always this question of does the industry need further consolidation? And I think the biggest topic with respect to that is where do you really get better R&D performance? And it's not been historically shown that when you bring large companies together, large portfolios together, you get better replacement power and innovation performance. Often you have two disrupted R&D organizations and two disrupted pipelines. So that's been, I think, the difficult thing to solve in our sector when we think about very large M&A. Now, when we think about more bolt-on M&A, this is primarily a science topic in my mind. While we know the XBI continues to hover around relative lows from where it's been in the last decade, we still are primarily driven not by valuation, but by the quality of the science. And I think what we're seeing now is as capital has flowed out of the biotech system, we see a lot more scrutiny and a lot more pressure on biotechs to actually have to show, do they actually have strong data? And when we look at that data, that's really what's driving our M&A and BD&L approach. So that's why we think the biggest opportunities are earlier stage. These companies that are early need some support from a large company like us that hopefully can bring these innovations forward.
All right, Vas Narasimhan, Novartis CEO, we thank you so much for joining the program this morning. We go from the micro to the macro. We are getting some headlines coming out of France here. The PMI is crossing the Bloomberg terminal. April manufacturing PMI at about 44.9. The forecast there was 46.8, so you are seeing some weakness there. But the services PMI coming in hot, rising to about 50.5 of a rating. The forecast there was 48.9, seeing a bump in the euro off the back of that. We are now at 106.60, Guy.
Really interesting that we see this outperformance on the services side. I mean, manufacturing still in the doldrums, it seems, but outperformance on the services side. Yep. The German PMI, which we're going to get in a few minutes' time, that's already back over 50 on services. And I think it was De Guindos you were pointing us towards at the top of the hour, doing interviews with the French media. He's talking about the services sector and that, the largest remaining threat stems from services inflation.
That's where the stickiness is. That's where the problem is, and that's why they cannot be sure at this point in time that they can progress much further than June. June looks like it's nailed down, and De Guindos is talking about that this morning. But where do you go from there? Particularly with the Fed potentially on hold, some sticky services inflation. That's where life gets a little bit tricky. And it's interesting to see the reaction we are getting, quite a strong reaction we are getting in euro dollar this morning to all of this coming together. Let's take a quick look at some of the stocks that we're watching. Here are the core six that we watch around Europe. Remember that LVMH has gone ex-dividend today, so just be aware of that. That's why you're seeing the weakness. But elsewhere, some broad strength coming through for European equities.
OK, let's have a quick look at what is on the move then this morning. I mean, broadly, we're moving higher across European stocks, up by 0.6% on the Stoxx 600. The FTSE 100 echoes that a day after we saw a record on the FTSE 100 in terms of its performance. We are once again talking about strength across European stocks. The futures picture then for Kriti for the US looks flat to positive. We're waiting for the next leg, perhaps, of the earnings story. We're in that here in Europe. We're in it in the United States. We move more and more towards the tech theme over in the US. And that's going to be really informative.
Yeah, Tesla reporting tonight, but I would also bring your attention to the bond market here as well. 461 on that 10-year yield. A lot of questions even just this morning about what that $69 billion auction in the States means and the ripple effects that you see not only in the yield picture, but also in the stock picture as well. Coming up on the program, you do not want to miss our interview. Christoph Schweizer joins us, the CEO of Boston Consulting Group. We're going to talk about, well, a little bit of everything, frankly. You don't want to miss it. Stick with us. This is Bloomberg.
Welcome back. You're watching Markets Today. We're 30 minutes into the trading session here in Europe. Bit of breaking news that we're going to bring you, which could have a meaningful impact on today's session. There's data coming out of Counterpoint, which gets a tally on what's happening in China for Apple. And what the indication is that Apple's Q1 China iPhone sales fell, drumroll, get this, 19%. That is a very big number that is going to have a meaningful impact, probably on the way that the market is perceiving Apple a little bit later on. I think it was Bank of America out with a more positive note on Apple yesterday. But iPhone sales down 19%, Anna, in the first quarter. This is a big, critical, very important, I can keep going, market for Apple.
Yes, absolutely. And we've seen some, there was at least one house yesterday talking quite positively about Apple and its prospects. So we'll watch how that one trades today. I'll pivot us back to the European economy. We got the French PMI data out a little bit earlier on. We've just got the German data, and it's certainly worth a look. So the French story was that services were better than expected and back in growth territory. Well, we've got some real positivity around the German services story as well. This is not a manufacturing recovery story, but this is services in much better health. So 53.3 is the reading for German services. That's above last time. It's above the survey of 50.5. Manufacturing still in the doldrums, as I say, 42.2 there. But that drags the composite up into growth for the German economy. I wonder if this is the changing nature, perhaps, of the German economy at work here. And the euro is certainly responding. Where does this leave the ECB and its ability to cut rates or or not. So that's the macro story. Let's use that as a way into our next conversation. I'm pleased to say we're joined by Christoph Schreiser, who is the CEO of Boston Consulting Group, passing through our studios this morning, and a great opportunity to get your thoughts. Christoph, really nice to see you. Thanks very much for being with us. So let's start with what we're hearing around the European economy, the Eurozone economy. On the services side, the French, the German numbers do seem to be adding up to something a little more positive. Does that fit in with the types of C-suite conversations you're having with European execs right now?
Well, for sure, over the past 1 or 2 years, the general narrative about the European economy has been very negative. Growth has been down. Inflation was high, now getting more contained. But fundamentally, I do think we had a lot of bad news. What we have been observing, and also in my conversations with many CEOs, is that there's a bit of a detachment between what the economies felt like and how the companies that are headquartered in Europe actually did. Look at the leading German companies. I mean, they kept growing, they kept investing, but of course in a very, very global way. And so there has been much less overlap between the German economy and the success of German companies. And I do think we are now slowly but surely starting to see some of the metrics pick up. You mentioned the PMI. That's good to hear. Yeah, I'm glad to hear that news. In fact, I do believe that there might be some more positive news coming about Europe over the coming months and quarters.
OK, so you have a slightly more positive outlook, things improving around the European growth story. Let's go from that to the sort of real big picture thinking that no doubt C-suite execs are doing right now around AI. And I know that this is just something that you're working on a lot. You're pivoting increasingly your workforce. You're hiring towards that. How big is the AI business going to be for you? Take us forward, Christoph, a few years, 5 years, 10 years. How much of what you do is going to be centred around AI?
Well, what we observe is that it's a very interesting point in the kind of adoption curve of AI and generative AI in corporate settings. We are at this point that the kind of Gen AI experimentation of 2023 is now turning into a company-wide and function-wide transformation of what companies do and how they operate. And that's a very interesting moment in the history of that technology. And we anticipate that there will be some companies that are true winners who make this a very productive and high return on investment technology, and then others who are going to be laggards and who are left behind. As BCG, we do advise companies on their biggest and most complex challenges, and not surprisingly, technology, AI and Gen AI is one of those items. It's very high on the agenda. We are approaching 20% of our revenue in 2024 coming from AI and Gen AI, which is one of the biggest growth vectors and, frankly, one of the biggest growth stories we have ever seen in our business in 61 years.
I mean, that's very quick.
I mean, absolutely. Well, we've been investing in AI for about a decade. Yeah, it's not that predictive AI is totally new, but generative AI came in as an additional vector over the past 18 months. And so, look, we are getting close to 20%, and we anticipate that that'll double over the next few years. And so it's becoming a major part of our business.
When we talk about the regional breakdown, though, walk us through where that growth is coming from the consulting business in particular. It feels like the Middle East is the hot spot lately. What challenges do you find there?
Well, the Middle East is an incredibly important growth vector for so many industries. I mean, if I talk to CEOs of any multinational company right now, also of the leading banks and financial services players, I mean, the Middle East is very high on their growth agenda. That's true for professional services firms as well. It is a major growth vector, but I mean, it's still a relatively small part of the overall mix. What we are observing is that in our type of services are in demand, and actually in growing demand in every part of the world. It's not that there are a few countries that drive it and others that don't. We see, I mean, the whole question that we just spoke about, AI and generative AI and tech, that's the same question for companies in Japan and in the Middle East and in core Europe and in the US and in Brazil. So it doesn't really differentiate that much.
Talk to us about the labor picture then. BCG is growing, but perhaps not growing as fast as it did, say, a year ago. In 2023, I think the stat is something like 2,000 employees hired. It's 5 times fewer than the previous year. Why that slowdown?
Well, the 2,000 is just the net addition of capacity and growth of our team. We actually continue to hire very significantly, and we will do that, and we are doing that also in 2024. We are very proud of that. I do think it was an important year to show to our team that we believe in the growth and in the opportunity out there. That's why we expanded. That's why we keep expanding also in 2024. And look, ultimately, I mean, any talent business moves, I mean, relatively slowly. You hire people, you train people, you develop them from one role to another, and you do not change that in quarterly increments. And we are very committed to our long-term people agenda, and quite successfully so.
Morning. Do you think AI will need fewer people, though? Do you think you're going to need fewer people in the future? Is this going to be a productivity boom for you? And if so, to what extent will that impact headcount?
Well, I do not fall in the camp of the people who predict that millions and maybe hundreds of millions of jobs are going to be made obsolete. In fact, at the companies that we advise at the moment, they all aspire to productivity gains. There's no doubt. Part of that productivity gain, however, materializes in the form of higher top line and higher growth. And it's not that, I mean, you immediately lay off large numbers of people. Some of that is going to happen for sure, but then on the other hand, new jobs are emerging, right? I mean, you need people who can program and code the respective AI and generative AI tools. You need people who do all the upskilling. You need completely different types of talent in your workforce. So, I mean, you're going to see kind of shifts in what talent companies have and where they recruit and where they rather reduce.
So what does that mean inside a consulting company?
For a consulting firm?
Inside a consulting company, you're going to need to hire more AI people initially, but can you hire them enough? And hanging on to them is going to be difficult. Where are you going to see, where's the productivity coming from within your business that AI is going to have a material impact? Because you look at the hiring curves, they went up, they're coming back down again. Does that trend sort of generally continue within the industry? I'm not talking specifically about your company, as AI starts to have an impact. And how does it shift within the consulting world to reflect the AI reality, how you hire, where you hire, and the numbers you hire?
Well, for sure, any professional services firm is as exposed to the opportunity and also to the downsides of a big technological transformation. And for us, that means that we, I mean, already have been hiring over many years a lot more tech talent. I mean, we talk about data scientists, we talk about AI engineers, we talk about designers, etc. So the number of profiles in that space is constantly going up. We have our dedicated unit for that, BCGX, with more than 3,000 people. I guess some other job profiles going to be fewer in the mix going forward. Absolutely, yes. So we take our own medicine and we very boldly embrace new technologies. Actually, all 33,000 BCG staff have access to a suite of Gen AI tools, and I'm blown away by the adoption and the use, and I mean, it's quite remarkable.
Christoph, let me talk to you about, so this is one area clearly of huge growth, AI globally. We've talked a lot about that. In terms of geographies, we're seeing quite a lot of consultancies growing substantially in their Middle East businesses. I wonder how you're positioned in that particular area, whether you're growing there, and any particular cities in particular. What's the Middle East experience for your business at this point?
Well, we are growing in the Middle East. I do think many companies of all sorts are growing in the Middle East. It's become such an economic powerhouse in many industries, obviously in the energy industry, but now increasingly also in industrial goods, in financial services, in the broader investment industry, now also for services. So, yeah, it's been a good market environment. But, I mean, again, let's stay calibrated. It's still a relatively small part of the overall global consulting industry and the overall global professional services world.
OK, we're going to wrap it up there. Christoph, nice to see you. Thanks for stopping by to see us. We look forward to seeing you again. Thank you very much indeed for stopping by to see us here at Bloomberg. Christoph Schweitzer, the CEO of the Boston Consulting Group. Boston Consulting Group. OK, coming up, I want to get back to this Apple story. We'll do that in just a moment. Apple's iPhone sales in China suffering the gadget's worst performance since COVID. You'd normally expect iPhone sales to be doing well at this time of the year. This is a kind of seasonal boom for phone sales in China. Other brands look like maybe they're taking some of the bonus here. We'll talk about that next. This is Bloomberg.
The decision that has been taken by the US to provide support for more than $60 billion is very valuable. And this joins also the previous decision of the European institutions to provide 50 billion euros in the Ukraine facility, which we will manage at the European Investment Bank. And I think it will provide much valuable support for the reconstruction as well as the military effort.
European Investment Bank President Nadia Calvino, they're speaking to the Bloomberg surveillance team in the States. She's very positive about the aid. It's in line with what you've seen from a lot of the European leaders as well. I'll point out, however, that when you talk to some of the Baltic kind of foreign ministers as well, and the foreign leaders there, they have a far more concerned rhetoric around it. They say, well, it's great that the aid's coming. We still have a battle along the way. At least those are the words of the Lithuanian foreign minister. And that caught my eye, that you were starting to see some real panic here. Is that, OK, we have the aid come through. When are we going to see it show up in kits, in troops, in defense spending, et cetera? What does that delay look like?
Yeah, Germany putting pressure on the US and others to increase supply of Patriot air defense systems, very specifically to Ukraine. And with that in mind, we know that the UK Prime Minister is in the region. He's in Poland. Yep. He's then in Germany. And he's talking about this. Well, it's going to be, it adds up to the single biggest package to Ukraine from the UK, scaling up the domestic defence supply chain within the UK to try and deliver on that as well.
I think the key thing, and Kriti put a finger on it here, is that there are gaps in the air defence system that Ukraine is currently operating, and there is an idea that maybe we need to pull in some of the more some more Patriot systems out of Europe. I think Greece is one of the countries, Spain is maybe one of the other countries, I can't remember exactly which countries, to provide that kit. But speed is absolutely critical here. Now we've gone through that key vote, and it's a Senate vote today, isn't it? Yeah. It clears the Senate today. And then I think it's Biden's indicated that the speed at which this is going to be delivered will be pretty quick. Yeah. And I think it's going to be interesting to see just how big an impact it can have and how quickly it will have an impact on the battlefield.
It is, and there's a market read-through to this as well, in that, and I think our producer Dan Curtis pointed this out to me yesterday, that some of the U.S. defense stocks have actually rallied to kind of record highs or 52-week highs on these headlines, on this prospect for aid as well. So RTX, I'm trying to think, what is the actual name? I'm thinking tickers. Raytheon.
Used to be Raytheon.
I know. I'm thinking tickers. I'm sorry. Lockheed Martin was another one as well, rallying off of this. The delay is interesting. I'm still coming back to that capacity story. Where's the commodity input, the aluminum, the steel, the raw materials that you need for this kind of longer-term bid?
And so it is interesting that in the midst of that UK announcement about what they're delivering to Ukraine, they do talk about the ability to scale up the supply chain, to speed up the delivery of these things. So we'll continue to monitor that. Other things we're monitoring for you today, of course, back to the markets, a big US two-year auction worth $69 billion. How that goes down will be watched very closely. As we've mentioned, UK Prime Minister Rishi Sunak will be visiting Poland, and then he's on to Germany. We've got European earnings coming later on in the day, so don't be fooled by the end of trading. We will still have some earnings coming from the likes of Kering on the luxury space. Over to the US, Tesla, Visa, PepsiCo, Texas Instruments, a lot of different themes around the earnings story to focus in on. And then we'll have some ECB speakers, some BOE speakers as well, speaking later on today. Hugh Pill amongst them. We haven't heard all that much from him, the chief economist at the Bank of England, so that's going to be certainly something that we will watch. I suppose that could be interesting in itself, couldn't it? We've seen this increase in gilt issuance being announced this morning, and where gilt markets trade, obviously important for the Bank of England at this point, and the trajectory for UK rates, very important. And does it continue to tack a little to the US, or does it, fall back to where the European story is?
Just going back to the supply side, the DMO is going to be issuing more gilts at the same time as the Bank of England is continuing with its quantitative tightening program. So there is, if you think about what's happening in terms of just the mechanics of the market, there is an awful lot of supply coming back into the market at this point. Can the market absorb all of that? And how long is it going to take for the market to kind of work out what the new pricing regime looks like, given just how big a supply story it's going to be looking at here? And there's no guarantee. We don't know. We're about to have a general election in this country. We don't know. That the Labour Party is sounding like it does want to be fiscally conservative on the other side of that election. But how long does that ultimately last for remains an open question here and in the United States.
This insatiable demand for bonds that we were promised 6 months ago around the world has not manifested. And I'm curious, even as we talk about rate cuts in Europe in particular, where that bid even comes from and why that narrative has changed when we're actually talking about not only cuts here, but weakness in growth, when we're talking about even the U.S. Treasury market perhaps not being seeing the bid that it traditionally would get. Where is that insatiable demand? And we heard our guest earlier this morning talking about the fact that 5% yields are very plausible but not much higher than that. Starting to be in kind of the traders' chats and the narratives is, do you start to talk about even higher 5%?
Right, and I wonder how any kind of economic recovery in Europe fits into that narrative. What does that do to demand and the demand story around? Because we've got the euro really responding this morning to that better than expected services data.
And you put that with the Guindos comments. We're watching what's happening with the Fed. The market's now pricing in a non-negligible, I think it's around 20% chance of a hike being the next move from the Fed. The ECB cannot go too far if that pricing gains traction. And we get June, then what?
Well,
What's the gap look like?
Yes, June is the expectation, but do we... So let's assume we get June. That is what the market is assuming.
80% is
price.
price.
But if you only do June and then you stop and then the future in the US path looks very, very different, you wonder how history looks back on that one rate cut in June if that's all you get.
But
and what effect will it have?
Yeah.
But there is now precedent for a kind of stop-and-go approach. You saw that in the hikes with the Federal Reserve, which at the time, I want to say about a year ago or so, the conversation was, if you hike once, you have to hike every meeting. You can't do the stop and start. And Goldman, I remember, was the contrarian at that point. And it feels like now there's a precedent to kind of do that.
There are some on the ECB Governing Council that are talking about 3-4 rate cuts this year.
Yeah.
As being a realistic objective. De Guindos feels like he's pouring an awful lot of cold water on that idea right now.
How does that all factor into the stock story as well?
Yep.
There's a bond story, there's a stock story, there's a global consumer story at its core, and of course, how does that hit the major tech stocks, which brings us nicely into one of the major ones we watch. Apple, of course, we're going to follow up on that story. The headlines crossing earlier in the hour. Their first quarter iPhone sales in China have suffered the gadget's worst performance since COVID, dropping 19% according to Counterpoint. Let's bring in Edwin Chan, Bloomberg's managing editor for Asia Technology. Edwin, walk us through the decline here.
I think this is the first kind of real snapshot of what's happening in China that we're getting. What it is Apple's popularity has been steadily declining. I think around the time, but certainly not just after Huawei released its now infamous Mate 60 smartphone, the one with the advanced made in China chip. And I think what that was kind of a wake-up call to many consumers within the country that local brands can outperform. And I think since then we've seen a resurgence of demand for local brands like Oppo and Vivo and Honor and Huawei itself, of course, and that steadily eroded Apple's market share. At the same time, you see a lot of news reports, including our own, about how the government is actively encouraging or discouraging the use of iPhones within the workplace, particularly at more sensitive agencies and corporations. So it's kind of a perfect storm of negative factors that are kind of depressing Apple sales in China.
Is this a product story, i.e. the opposition is better at producing products that the Chinese consumer wants at the moment, or is it that politics? And what are they buying? What are the Chinese consumers buying if they're not buying Apple?
I think that's the thing, as I was alluding to, this has been a steady transition. It's been a process. I think over the past 2, 3, maybe 4 years, a lot of Chinese brands have begun to escape the perception that they are cheaper and lower quality, inferior alternatives to Apple and Samsung. Speaking of Samsung, they barely have any market share left, whereas Apple is starting to see a decline. And I think companies like Huawei have managed to get a lot better at not just catering to Chinese tastes, as you mentioned, but also coming up with genuinely high-quality products, good cameras, for instance, longer-lasting batteries, better memory, that sort of thing. And I think Chinese consumers are responding.
Okay, so China still remains one of the company's biggest markets, as you've spelled out. It's still important to Apple, but things are becoming more difficult, and geopolitics does play a role in some of that. So is this the direction of travel for the foreseeable future, or does this change?
I think it depends on a number of factors. One is how hard Beijing, the Chinese government, pushes consumers away from Apple. But the second, perhaps more important factor is what Apple does in response. I think there is, right or wrong, a perception, at least within the Chinese market, that Apple is lagging in a few areas, not least in terms of integrating artificial intelligence into its gadgets. I think a lot of brands have gotten good publicity around what they like to call the AI phone. AI computing, edge computing, if you will, and Apple is perceived as a laggard in the generative AI race. So it depends what Apple does to overcome that perception, and not just in China, by the way, but globally as well. At the same time, consumers do need to see an evolutionary upgrade in the next lineup of iPhones, whether you want to call it the iPhone 16 or whatever. There is a growing sense that there has to be a bigger leap forward to really get consumers excited again.
Edwin, thanks so much. Managing Editor for Asia Technology, Edwin Chan, joining us there with thoughts on Apple and a challenging market that still remains.
Mark Gutman had a really interesting piece over the last couple of days talking about the fact that Apple may need to change tactics here and may need to go for a more low-end, sort of price-sensitive phone, which it's never done before. Up until now, it's kind of chased margin. It may have to shift tactics here and start chasing the top line and the volume story. How does that kind of upset the longer-term story? How does that upset the services? I don't know. But I think there is it feels like that people are talking about a pivot for Apple.
It feels like our expectations are always so high with regards to Apple. I mean, a business that's really reinvented our lives in so many ways. How do you live up to your own hype in that situation?
Yeah, it's...
You innovate. You innovate. You have to keep innovating, and that's where the struggle is.
But I'm also wondering if they start to change and transform their business model a little bit, right? Because I think 30% of Apple revenue comes from services. It's like the Genius Bar as well. So it's kind of the Apple Cares, the screen fixing.
But that's where there's so much regulatory pressure in that space.
There is. But we keep talking about Apple as kind of this hardware company. Does it ultimately, in, say, 10 years' time, become a services company to offset this kind of weakness, this kind of exposure?
Increasingly so, perhaps. I mean, from one increasingly services company to a company that does do tech services, and that's SAP. It's the best performer on the Stocks 50, I think, today. It's certainly up by 4% this morning. So we've got some outperformance, and Novartis doing also pretty well as well. So we have spoken to the CEO of Novartis already this morning. He was talking pretty confidently about the outlook for that business as they really strongly upgrade their guidance, and we will be hearing from SAP shortly. 9:30 at UK time, we'll speak to Jeff Curry, Chief Strategy Officer of Energy Pathways at Carlyle. You don't want to miss his thoughts, of course, on the commodities market. And later this morning, we'll be speaking to the CFO of SAP, Dominic Assam, that on the back of these numbers that have sent this stock up quite strongly, up by just over 4% as the pivot towards the cloud continues. That is it from us. This is Bloomberg.